What's up, everybody? I'm Ellis. I'm your host of the Say All Star Hackathon with Say. We have a good friend of Crack Labs joining us today, DB from Delta Blockchain. DB, say hi.
Hey guys, how's it going? Excited to be here.
So, guys, we have a super special treat. Don't say that too fast. And I'm very excited to actually get DB to tell you guys a little bit more about what goes on under the hood when you're not only pitching to a VC, but if you're actually a VC yourself, what you're kind of looking for. But with that, I will let DB introduce himself, give a little background, and we can kick off the presentation.
Absolutely. Thank you, Alice. Thank you for having me over here. Hi, everyone. I'm DB. I work on the investment research team at an early stage crypto native fund called Delta Blockchain Fund. I've been in the space for almost 4 years now. I think what started my journey in the space was when I wanted to send some money back home to India. And I realized the remittance charges were around 3 to 4%. And that is when I came across stablecoins. And that made so much more sense to me. Almost instant liquidity. My parents would get it almost instantly, and then they can use it wherever they want to by converting it into the fiat that they want to. So that is what started my journey. Before this was working at an enterprise blockchain startup where I was sort of transitioning, leading the charge from the private to a public blockchain. And I'm based out of New York. And I'm excited to share my journey with you guys and how investors think when they're talking to founders and what are the different pointers that they look out for. Alice, you're on mute.
It's the thing that happens to me most often nowadays. So give us a rundown of some of the things we should expect in the presentation.
Yeah, absolutely. I think we'll just be starting off from like the broad overview of crypto fundraising in general, and then maybe we'll dive deeper into what are like the best practices from like a founder's perspective. Then there are different paths that you can take while you're fundraising as well, right? You can go off for like a safe route or a SAFT route or a safe plus token wallet, or you can go for a community fundraising platform. So what are the different things that people should keep in mind? And also what is considered to be good habits from a founder when they're talking to an investor and vice versa as well, because I think a founder investor is not just like a one-way street, but a two-way street as well. So not just the founders should have the, like, it's not just the VC who's looking for the right founder, but I think the founder should look for the right VC as well. So those are some different things that we'll be talking about.
Again, guys, I think we are in for a treat, to say the least. Very good information for a hackathon, to be frank. So make sure you take the most out of it. I'm going to hop off stage, DB. I will give the mic over to you, and we'll progress through the deck like we talked about before.
Absolutely. Thank you, Alice. If you could just change the slide whenever needed, please. Yeah, guys, I think we just want to kickstart with stating the fact I don't think fundraising is the goal. It is just a tool for you to get where you want to be. And that is why you know a lot of founders who probably start with bootstrapping the whole process unless and until they can get a product market fit or like some sort of traction. And I think that is absolutely fine to do as well. You should always look at fundraising as one component of it and not the main component of when you're building out a startup. I think we just like to right into the presentation then. I was just wanted to highlight some quick overviews as well. So for example, for crypto specific funds, right, in 2024, around $13.7 billion were invested across 1650 fundraising rounds. And almost $5 billion of that came from US entities, which proves the fact that US is the leading geography while you're looking to fundraise right now. And also in 2024, we saw there was like a 20% increase in the amount of fundraising that was done in 2023. So in general, VCs were pretty bullish in that year. But as you guys already know, with the tariffs and everything that is happening right now, I think we are in murky waters right now. And therefore, it is still going to be TBD on how this year progresses. One point that I would like to make, and Alice, if you could go to the previous slide, please. In crypto, especially, there's always the question of like a product market fit versus a narrative market fit. So these are some charts that I took. So for example, on the right side, you can see Kaito's analysis, and this is from around January of this year. So you can see AI was dominating the charts, like around 50 to 60% of what was being spoken about was in AI. But if you look at the actual on-chain transactions that were happening vertical-wise, only 1 to 2% of that was coming from AI. So which means that even though what actually is happening in the industry is not being reflected in what is being spoken about. Therefore, as you're venturing into the space as well, you always need to think about like what is the hottest narrative that is being spoken about. And I hate to say this, but like that is something that can sell sometimes as well. For example, if you in the meme coin cycle, if you were doing something, I do not know, maybe in the NFT space in 2021, or in the DeSci space right now, or for example in restaking space, when Eigenlayer and all of those protocols were launching like LRTs and LSDs, there was a slight chance that we could have gotten better valuation, or even the progress could have been easier, because crypto is what you are able to sell, not what is actually reflected, which is the hard reality in the industry. But I think if you're building for something in long term, I don't think you should be concerned about this, but keep on building and be at it. I think for next slide, yeah. So yeah, just like a brief overview on the fact that US leads the fundraising for now, and which is closely followed by UK, Canada, and Hong Kong. Next, please. Yeah, so I would wanted to highlight some best practices as you guys are thinking of going out and raising for the round. I think again, as I previously mentioned, it is not the VC who looks for the good founder, but as the founder, you should always look for the VC that is aligned with your best interest, right? Because I think one thing that a founder needs to realize is that the VCs, most of the VC funds are LP backed, which means they go out and raise external money for their own fund as well. Therefore, they need to show some returns to their investors as well. And therefore, every VC fund has maybe like a 4-year cycle or a 6-year cycle. And any investments that they make are keeping that thing in perspective as well. So when you're looking out, you need to be very clear with the VC partner in terms of whether, if, for example, if you're going to have a token or not, or this is when you're expecting to have a token, or the fact that you might not even need a token, which is absolutely fine as well. But having a clear communication is very important. I think secondly, always go for smart money. Don't go for any money that is out there, unless and until you're obviously are forced to do that, right? Because I think like your startup survival is the most important thing as well. I think secondly is that one thing I've realized is being in the space. I think I've been in the investing space for almost a year now. It is not just the founder who pitches to the VC, but the VCs also need to pitch internally to the investment committee, right? And therefore, as a VC, as much information as I can get, that is really helpful. So I think I always ask and I always recommend people to have like a solid data room. And the data room can contain a number of things, right? For example, it can contain like your product demo. It can contain your fundraising details from past and present. It can contain details about your team. It can contain details about your product roadmap. It can contain details about competitive analysis. It can contain details about your business model or your tokenomics, token utility, etc. Also, as you are venturing into the space, you would have a lot of same questions that people keep on asking you. So having like an FAQ doc is very important as well. You can also have a white paper there. So I think, and this also shows the fact that you can write in detail, so which is pretty good as well. So I think having a solid data room is a winner over there. Thirdly, around follow-ups, I actually don't believe, I mean, a lot of founders tend to think that, having a close connect with the VC might help us fundraise down the line. I actually don't think so. I think if you're building a good product and if it is a good team, the VC would reach out to you, right? I don't think you need to have those warm connects to get there. And I mean, I do that all the time. Any good founders that I come across, I ping them first, right? So I don't know how much time value it is to start building those warm connects. But then I think once you start building a good product, the fundraising would take care of itself slowly and slowly. Also, fourth point, I think keep in mind that fundraising can take some time as well, and especially depending on the market. Like the market situation right now is not very good. So it can take from anywhere from like 3 to 6 months to even 12 months, depending on the market. And therefore, having to 12 to 18 months of runway is crucial when you go out and fundraise as well. Fifthly, you need to be concerned about regulatory clarities. For example, if the fund is based out of like a Cayman entity, or if it's a BVI entity, or if it's a US-based entity, and if your startup is based out of, I do not know, Singapore or India, so you need to be concerned about all of these things as well. Sixth, I think having good code audits is crucial as well, because that gives any person who's investing in a startup some sort of confidence that you've been through that process, and there are not some bugs that might get you rug pulled right off the bat. Lastly, I would say having a concise pitch deck is also important. I come across decks that are maybe 30 plus slides, and I don't think that is the best way to do that, because in most funds, before they even decide to do a first call, they look at the deck, and maybe they look at the deck for maybe 2 to 5 minutes, right? Therefore, you want it to be as concise and as precise as possible. I think maybe like 10 to 15 is a good way, and then you can obviously have like a big appendix, right? Because anyone who wants to dive deeper would go into that, and having a data room supporting that is, again, that is where the can come being important as well. Next slide, please. I think one thing that you should also consider while you're going out in fundraising is, A, do you want to raise only like from a Web3 native fund, or do you want to raise from funds who are both Web2 and Web3, right? Because depending on how you're looking to structure your company, whether you're going to have a token or not, whether you're going to be just a pure equity play, or you might have a token down the line and if you pivot. So I think those are some important things to consider. And even before the token, I think one question that you should ask yourself is, does your product even benefit from a token, right? Because if your token is the product, then I don't think it is going to be a very sustainable roadmap. But then if you think the token actually benefits from maybe utility through like staking or governance or etc., then you should have a token, right? Second is, you also need to be clear on when do you want to launch a token, when it makes sense for you to have a token. Thirdly, again, like, does the token accrue any value, right? For example, one example that I would like to give here is, for example, Hyperliquid. Now, Hyperliquid is a revenue generating protocol, right? I mean, they've generated around $42 million in revenue last month. So for them, having a token makes sense, because now they can think of accruing the value that the protocol makes back to the token holders. So you should always think and consider that in mind. And maybe the last few points around, can the product be successful even without a token? Because sustaining the token price is a different ball game as well. You need to have different market makers, you need to have different KOLs and everything on board to be able to do that. And also, what are the different monetization strategies for your product and the service? I think, for example, for those who do not know what a SAFE is, I think so. SAFE was started by the Y Combinator based out of SF. And the idea is that you're selling future equity in your business and not tokens to begin with. And the investors get a right to token when there's a price round down the line. But it is a very clean process for anyone who's going and looking to fundraise. And it is less relevant if you're thinking of only having a token and not equity. I think if you're only thinking of having a token, doing a SAFT makes more sense. And it is where you are selling future tokens and not equity. And the investor gets the right to receive tokens when they launch, right? When you have the TGE. And then around that time, you can have like a full-on vesting schedule as well. You can also have a cliff in which, for example, if you have a 6-month cliff, then the investor cannot go and sell the tokens during that 6-month cliff, right? Lastly, I think if you believe it's going to be sort of a hybrid structure, you can also have like a SAFE plus a token warrant or a side letter. And the token warrant gives the investor the right to buy to get tokens in the future when you do have a launch, right? But if you don't, that is completely fine as well. So yeah, I mean, depending on where you're sitting in a hybrid structure, you can think of doing these different structures. Next, please. Yeah, I think one point I would also like to highlight is there are different ways to fundraise as well. It could be like from a traditional VC, or it could be through a community raising platform. I mean, it could be like a syndicate, right? I mean, like Echo or AngelList or StationX, or it could also be like a launchpad like CoinList or Legion. So depending on how and what your protocol is doing, you can take different paths. And compared to community raise, I actually am not a big fan of airdrops, because most airdrops I don't think have like a long-term incentive aligned for the token holders to actually keep on continuing to hold your token until they can get some revenue from the protocol back, right? So for example, if you look at the chart over here, DYDX and HYPE tokens, they sort of sustain for like a longer period of time, whereas most of the tokens were dropped by investors right in the market. So you need to think through different game theories on what makes most sense to you. For example, if you got a social platform, then maybe doing like a community fundraise could be helpful to you, because then anyone who invests in your startup goes out and becomes your own KOL in a way, right? So I think those are different things that you can think through. And I think going forward, a lot of these community fundraising platforms might actually start replacing VCs who are not able to value add that much. Next, please. Yeah, I think so. That's the end of the presentation. I think one more point that I would like to mention is that in the markets right now, as a founder, you might be thinking whether you should be launching a token in a bear market or a bull market, right? My belief is actually if you do launch the token in the bear market, um, if someone looks at the token, if someone becomes your early buyer right now, and if they have a return maybe a year or two from now, then they actually become true proponents of your protocol. Whereas if you do launch the token in a bull market, yes, there might be more liquidity, but then you also need to see the percentage ROI that they can make when they entered in the token versus when they exited, right? So I don't think it is the absolute worst market to be in to launch a token, because as long as you can have the liquidity, right? So yeah, I mean, I think these are the different things that you should be concerned about. And lastly, I would like to mention that in the market situation that we are in right now, a lot of venture funds are also thinking of doing more liquid deals because they can get them cheaper. So those are different things that you should be thinking about on when you want to have a token or when you want to go out and fundraise. And yeah, I think that's it. If there are any questions or anything, happy to answer them.
Awesome. DB, that was rad. I have a bunch of questions, but I will give it a few minutes for anybody in the audience that might want to ask DB directly anything. We'll give that, I don't know, 30 seconds or a minute or two for people to type some stuff in. If not, I'm going to hit you with a bunch of questions that I know I want to know the answer to.
That's awesome. Looking forward to that. And if you guys want to reach out to me at a later point of time, I think I can drop my TG here as well. Feel free to ping me. We are actively deploying, so we'd love to chat with any founders out there.
Awesome. And then would love to get these slides from you too, which we'll post back on the microsite, guys, and you'll be able to access when you want. Give it a few more minutes, and then I'm going to ask some questions, DB. Actually, let's just give it like 30 more seconds because it doesn't look like there are many questions from the audience. All right, so I will ask some questions just directly on my own. Tell me, like, speaking to Delta maybe specifically, but then also maybe a little bit more broader from like a VC perspective. You talked a lot about how a founder needs to find a VC that's right for them, right? And I know a lot of these guys and a lot of the devs that are coming out, the project might be in stealth, or they themselves might be maybe not too confident in knowing ahead of time what they're sitting on, right? How do you present yourself to a VC when you're still kind of shopping it around without falling into the wrong traps? And then what does it actually mean to find a VC that has your best interest at heart, if you know what I mean, rather than something else? What kind of double tap that for me?
Yeah, absolutely. I think when you're in stealth or when you're in product iteration, right? So I mean, I think so. We look at it from pre-seed to Series A. I think when a pre-seed company, when you're talking to them, honestly, I think there is more likely than not they will pivot as the market progresses, as they sort of go out and try finding a product market fit. So I think when you're taking a bet, you're actually taking, especially post a hackathon, right? You're taking a bet on the people that are building out the product, because you want to make sure that they can build the next version that might be better than the current one. So I think that is one thing. And as you're thinking through that, talking to as many people as possible is, I think, the right strategy to do. But I would have one caution over here. When you pitch to a VC, I think pitching to them again is honestly a task. And by this, what I mean is that when, let's say, I talk to a startup and I pitch that internally, and for whatever reason, if you pass on it, for me to bring that startup again is, unless and until they have some materialistic changes, it is very hard to do. And not just personally, I think that is true for for anyone out there. So you also need to time when you think you're ready to go out and raise, rather than being super early and then getting like a bunch of rejections and then you feel dejected, right? So be in touch with your founder community, ask them for feedback, go out, present your ideas at different hackathons or wherever, go and meet devs out there, and get some product feedback earlier rather than going out and if you're not ready to go out and raise. And also, just one more thing is, for example, like my team was lucky one of the winners at ETH New York, and therefore after that we got a lot of interest from different accelerators as well. And as we were chatting with them, we just realized we need to make some tweaks here and there. So I think it's always good to have a conversation, but then, and we were clear that we're not looking to raise right now, right? So you can also make your intent very clear when you're talking to someone. So yeah.
So leaning in, or excuse me, going into the kind of founders and presenting the team correctly, how important is the founder's journey being tied to the problem actually being solved?
Yeah, I think if you don't have a dying passion for something, I don't like. Just my personal opinion. I don't think you should pursue the startup because you're going to face 1,000 challenges out there, and if you're not ready to go through each of them, then it is going to be a difficult journey. So you need to really love what you do. And if it is a problem that you face, it is more likely that you would be out there and trying to solve for that problem. So I don't think that anyone who has only faced a problem can solve for it. But any problem that you're solving, like you're trying to solve, you should be passionate about it.
And when you guys are looking for new projects to kind of scope out, are you looking more towards the why us, or that it's novel underlying tech or disruptive in some way? Like, what is it that is the most compelling? It sounds like why us more so than the others.
I think it really depends on the stage of the startup. For example, if it's pre-seed, then again it's very heavily relied on the team. But let's say if it is seed or pre-series A or in that stage, right? Then a lot of other things come into place as well. For example, in terms of why them, is it the tech that makes them stand out? Is it the business model that makes them stand out? Is it the geography that makes them stand out? So exactly like answering the question of what is the moat over here, then I think B, how sustainable the moat is as more people come into the market, or if bigger players try to come into that particular market, will that moat keep on fading away, right? Because you can have a first mover's advantage, but I don't think that is a sustainable moat in the long term. Or you can even have and try to compete with someone on the price, but then if a bigger player comes into the picture, they can actually might be able to beat you on the price. So figuring that out is important. I think B, figuring out the business model is important as well, because you can get early traction by incentivizing, right? You can have so many airdrops and whatever, but is that like long-term sustainable or not? So that is, then third, if you, let's say, for example, if you do have a token, is the token accruing any value at all? Because I think gone are the days when you could just have like an Elvin go have a token and the token was trading at the premium. But I think now more protocols and more people are trying to look at revenue generating protocols and how that accrues back to the token holder. So I think those are different things that we look at. And maybe lastly, like competitive analysis is also very important. And also we want to be, and I think that is for any VC, they want to be where the puck is going to be. So for example, if you're building a project that I don't think makes sense year or two from now, then like why even invest, right? Because if let's say if you're building like Telegram mini app, right? Like Telegram mini apps were all the hype back in like just a year ago. But now I saw someone who had like millions of users, but they're selling for $8,000. And that is because I think slowly people are realizing if Telegram changes its one policy, like they're screwed in a way. And that is what happened to Facebook games that were back in the day, right? When Facebook tweaked its policy. So those are different things that are important.
So let's shift gears for a second and talk a little bit about the actual pitch, right? So like Delta, like all VCs have their own individual thesis. How important or how much do you like founders that wrap the product into the VC thesis? How important is that in your mind?
I actually don't think I think when as a founder you're going out and raising, you obviously should know the thesis of the fund. Because so for example, like we are agnostic, right? So we just need to have some overlap with that team. But then there are funds that are Bitcoin only funds, or there are funds that are deep in only funds, right? So therefore, when you're going out and raising, you need to have that clarity in mind. So I don't think the founder should even if they feel that the fund does not invest in the thesis, then why have the conversation? But if they feel that it does, then I don't think post that the founder needs to be concerned about whether we are able to wrap up our startup around the thesis that they have.
Let me ask you this: you have heard probably a lot of pitches, right? How many pitches do you think you hear on a weekly basis at this point, or in your year? How many do you think you've had to go through?
I think maybe on a weekly, it really depends. I mean, I think on a weekly basis, maybe 10 to 15. But then having said that, it is also the fact that like you look at maybe 10x more decks and then you decide to have a call with one or two, right? So yeah, I mean, that is the case as well.
So in the last, call it 12 months, around 500 decks that you've gone through, a smaller percentage of that have had to actually live pitch. But when you have a team on the line that seems investment worthy, what is it that makes you actually lean in? Like what catches your attention the most?
I mean, I think if they can be the leading player in the vertical that they're targeting, that is one thing. And I think when you even talk to them, like I think irrespective of what you're building, like if you have a big vision, right? Like you need to be able to sell the vision. Like I think a lot of tech people sometimes struggle with this. You know, they're super technical, but then I don't think if they can go out there and shill the product or get more users on the product. So those are different things that anyone can look at. And I think overall, just having like a fighting mentality is crucial. Yeah. Because I think also Alice, it flows both ways as well. Like I think there have been times when we wanted to be a part of a deal. I think that probably happens to a lot of VCs when we wanted to be part of the deal, but then we were not able to because maybe like a bigger fund came and took the round, or we were a bit late to come and get across the deal. So I think it is both ways.
When do you think that someone should consider bootstrapping versus raising?
If you feel that having more money can help you accelerate the speed of which you want the product to go out there and can help you get more traction, more users, more revenue, whatever, then if you feel that having a strategic partner in place can actually help open some doors for you, then see if you need to pay the rent in New York. You need to go out and raise, like unless and until you have the money to bootstrap it. So yeah, I think those, and I think maybe lastly, I think bootstrapping might make sense when you again like when you're very early, you're still trying to figure out the product market fit, you're still trying to find some traction. I think if you have those numbers ready, then A, you can get a better valuation, and B, you can probably get investors that you want. So you might be able to raise smart money rather than any money that is given to you then. So those are different factors.
So for somebody that's participating in these hackathons, which you yourself have done many and one, your own handful, what's probably the biggest piece of advice that you could give to somebody that's building, not let's call it a project, but actually building or trying to think about putting together a business? What's a top thing that you can give them from a piece of advice?
To have fun at it. Like I think all of this will like fall in place. Like if you're having fun at what you're building, like I don't think anything else matters. I mean, for example, like Uniswap came from the ETH New York hackathon, right? So I would be very surprised if the founders, when they were starting to building that out, they actually thought they would have this protocol that would be making so much revenue down the line. They
Right.
just started building it out, right? So, and I think also at these hackathons, it is a great opportunity to meet people who are passionate about what you are passionate about. So I think meeting co-founders could be a big thing through the hackathon as well. And B, I mean, I think like for example, like when I was hacking, I had no idea that we might actually think of pursuing this. Honestly, we were just seeing of what the different price pools were and how we can sort of try to get more prizes as well. So, but it was a lot of fun. So, but yeah, I mean, dude, like I think if you want to build a product out of this, it will eventually happen as long as you're having fun and you're building something that the world actually needs.
That's one of the keys, right? It's like don't solve problems that nobody knew existed to begin with. Solve real problems that people actually care about, and shake it up.
Yeah, don't build a solution, then you go out and look for a problem. Like just don't do that.
Yep. And then also don't build around the hype of the moment.
Yeah.
Someone will catch it. Maybe you get a lottery ticket, but flash in the pan isn't really something with much longevity at the end of the day.
That is absolutely true. I mean, I think smart money sticks for like a longer period of time.
Yeah.
The new thing, whatever, it might die down. So yeah.
Well, DB, thank you again, my friend. It's been an absolute pleasure. For everybody that's watching, again, good luck with your builds. We are here to support in any way possible. Feel free to reach out to any of the admins in the Telegram group, anyone at Cracked Labs, myself included. We will schedule one-on-ones. We will support you wherever we possibly can. And we will try to sharpen you up so that one day you will be pitching to DB2.
I hope I get to meet the great founders over here.
There you go. Well, guys, again, thanks everybody for watching. You'll be able to find this live on the, or excuse me, recorded on YouTube. All of this will be posted back to the microsite for easy access. And everybody have a great rest of your day.
Thank you, Alice. Best of luck, everyone. Bye.